was another rocky year for the housing market, and it is coming to an end. One week, we get good news. Sales of existing homes are up. And then the next week, bad news. Sales on newly built homes are down. And then no news at all. Home prices relatively flat. So with all the ups and downs, highs and lows and middlings, what will 2010 bring the real estate market? More inventory, foreclosures, first home buyer tax credits. Let's turn to our stellar panel on real estate. We welcome real estate analyst Dani Babb, Drew Kessler of Rand Mortgage, and in Miami, we welcome the condo vulture himself, Peter Zalewski. Good to see you all. Dani, first to you, just in general, how do you think housing is going to do in 2010?
I don't think it's going to do so well. I think we're going to see the end of tax credits hit at the same time that the spring buying season tends to hit. The end of the spring buying season tends to hit. We're going to start to see some of the shadow inventory, the 7 million homes that banks are hanging on to and haven't yet put on the market, hit the market.
Shadow inventory. That's a relatively new term.
That's about 10 and a half months worth of inventory, which could significantly affect this market. So I don't see housing improving in 2010.
By the way, why would banks unload it in 2010? Why wouldn't they just hold it?
That's a good question. What I'm hearing from a lot of people in the banking industry is that they're anticipating the jumbo market collapse, so they're trying to. There may be some desire to get rid of it before jumbo.
And Drew, I have to admit, I've heard about sort of a second round of foreclosures in the jumbo loan area. Are you hearing the same thing?
Well, what we're going to see, I mean, I actually take a different view for 2010. I see it as an optimistic year, the year of stabilization. I believe this is going to be the first year we've had in a couple of years where things are going to stabilize. We're finally going to see the month of supply for inventory to come down. I'm believing in March we're going to be at a 6-month supply. Most economics that are looking for, housing stabilization is looking for a 6-month trend. Right now we're at about 6.5, 7 months. So outside of the foreclosures hitting the market, which I don't think is going to be as grim as some are forecasting, I believe 2010 is going to be a stable year.
Peter, it's up to you to break the tie.
I got to tell you, I think 2010 is about stabilization across the country. I think there's certain markets that have already hit bottom. They're sort of scraping, and then there's other markets, maybe like a San Diego or Southern California, still got a little bit way to go simply because there was new product that was under construction as recently as this year.
All right, and that's you bring up a great point, which is that real estate is like politics, is completely local, and you might have something happen in one end of the country and totally different thing in another end of the country. But generally speaking, what happens, Peter, if in fact interest rates do rise a little, and a lot of people who've been sort of edging towards buying property get scared off by higher interest rates?
Well, I mean, what I can tell you, 9 out of every 10 of our buyers are all cash. The interest rates have absolutely positively no bearing on what they're trying to do. A lot of flight capital coming in, taking advantage of that weak dollar, trying to park it here. And most of them are bullish about the United States. They like the possibilities. They like the future. A little bit different story if you go into the Midwest. You go to someplace like Chicago, maybe you go into an Iowa, maybe a Southern California. You do have some of that Asian money coming in from what we're hearing from our people out on the West Coast. So it really is going to be, interest rates will have an effect, but I don't think that's today's buyer. The first-time home buyer program, it's doing a little bit, but it's not really driving our market at least.
But Dani, the point is, most of us lesser mortals have to get a mortgage. We can't rely on pure cash, just dig in our pocket and peel it off like that.
Absolutely.
So interest rates are going to affect people's decisions.
I think they'll also affect you psychologically as well. So even if they're not necessarily going to make a drastic difference in payment, they may affect the buyer psychologically. And we cannot discount the fact that since June of 2009, 1/3 of people who have purchased homes have qualified for the tax credit. So what happens when that disappears, and what's going to happen to inventory?
Well, frankly, what happens, Dani, is the possibility politicians will extend it.
That's absolutely, unfortunately, very true, which will never get us to a real stabilization without the government propping it artificially up.
And the problem with the artificial prop-ups, as you know very well, we've talked about it before, Drew, is that it doesn't release the inventory. You got to have this clearing of inventory for the housing market to get back on track.
Well, I believe rates are going up. It's not a question of if, it's a question of when. The government has been doing a phenomenal job keeping them artificially low, and that's going to change. I'm forecasting over the next 12 months, I see this time next year rates are probably going to be in the mid-6s. Still phenomenal interest rates if you look at history, but psychology has a lot to do with it, and it's going to have a significant impact on payments. If you look at your average buyer, it's going to affect them between $100 and $200 a month in simple payment, possibly $50,000 in buying power. So I think that is going to have an impact on potential people.
How about the availability of mortgages? There's some great rates out there, but there aren't a lot of people who can get them.
Well, I think
is that going to loosen up a little in 2010?
Is better than it was, and is, I think, going to continue to be a little bit better than it is. You have private mortgage insurance companies coming into the market, opening up, in a way, their wallets a little bit. They're going to allow more people to be able to get financing. Today is the day of being able to verify your income and your assets. If you can document your information, you're going to have a very good chance about getting a mortgage.
Danny, it's going to be tougher or easier to get a mortgage?
I think it's going to be more difficult. I do agree with Drew that the PMI companies will make a positive impact in the market. But if you're a small business owner and your stated income, 30% of the country, good luck getting a loan in this market. That's not an option. Where the banks are lending, first of all, we have community banks lending, which are getting hit by the commercial real estate market. So that's going to be out of the question, I think, in 2010. But we also have banks that are going to require consistently more money down that people just don't have. And with 1 in 6 people being unemployed, that's going to weigh in here as well.
All right, Peter, let's talk more to your particular expertise, which is price. The price, particularly
Yes.
if interest rates go up and it becomes harder to buy a house, maybe prices will come down even further. Wouldn't that even affect markets like yours, the all-cash markets?
It may, but really the buyers are going towards quality right now. They're going after that new construction, realizing you're not going to see a crane building any kind of residential for the foreseeable future. So they're picking that stuff off. If you go to suburbia, if you go to the typical intersection where there's a gas station and there's a grocery store and there's a pharmacy, that product still has a long way to go simply because nobody really wants it. It's all cookie cutter, generic type of product that you can't get an all cash buyer for. So I think it's really a tale of two markets. If you have your higher, more attractive stuff, that product's moving to all cash buyers. If you have your more suburbia type of product, it's continuing the free fall because there's no backstop.
By the way, Peter, does that include commercial real estate? I remember the days when the Japanese and the Arabs were coming in buying, the Empire State Building and big commercial properties like that. Is that also affected by what you're saying?
Well, from what we're seeing, all the lenders we're talking to, and we're dealing with regionals and we're dealing with Florida-based institutions who are very concerned about a new 500-person FDIC bank seizure and asset sale office that just opened up in Jacksonville. They're all concerned about the commercial side coming in late 2010, so they're trying to deal with the residential books as best they can. They realize there's a lot of problems. I mean, we just put out a report this week talking about how 1,200 Fannie Mae properties moved in 2009. There's another 1,100 they have on the boards, and they're moving this stuff at 40, 50 cents on a dollar.
Whoa. What about commercial real estate?
Yeah, commercial real estate. There's $1.4 trillion right now in commercial real estate that's that's going to come up due in the next 3 years. There's about $170 billion right now at the end of 2009 in delinquencies in commercial real estate. The commercial real estate generally lags behind the rest of the market by 1 to 2 years. Mm-hmm. So what we're seeing in the markets today, we'll see in commercial real estate in 2010, 2011. That's going to be a really big problem because these banks that are getting hammered are the ones that lend.
But Drew, we've been expecting that shoe to drop for about a year now, the commercial real estate shoe. So far it hasn't. Are expectations greater than what's actually going to happen?
Well, I think what you're going to see is, again, you're in a situation right now where you have the commercial market behind the residential market, and it's going to mirror kind of what happened. A lot's going to be with the jobless. We're going to be looking at over the next year what's going to happen with unemployment. I think that's going to have a lot to do with the commercial market, really with what we're going to be putting into it and what we're going to have available to us.
At the end of 2010, will the average price in America for a residential home be greater or lesser than it is now? Dani?
Less than it is now, and this is the first time in history we've had demand greater, supply lower, and prices down.
What do you think, Drew?
I see greater. I see it's going to be a minimal addition, but I'm seeing give or take between 2 and 4% increases in 2000.
And Peter, I know your situation is unique, but what do you think?
Well, I think nationwide is probably going to be lower, but I think in very desirable markets it's probably going to be higher.
All righty, Peter Zalewski, Drew Kessler, Dani Babb, thanks to everybody for coming in. Coming up on deck, what internet sites will you be surfing next year? Fox News' Courtney Friel power ranking them when America's Nightly Scoreboard continues.